Hello, everybody. This is Steve Poulter with Ghost Trades. It is July 16th. I want to talk about last week for a minute and maybe take a look at what's happening next week. Now, on the surface, we had a good week last week. On the S&P, we began the week around 4,400. We ended the week around 4,500. So, like I said, at first glance, we had a great week. However, on Friday, we did go all the way up to 4,524. Fairly quickly after the market opened, and that was the high for the day. The rest of the day we pretty much sold off. There are some who think, and I am not inclined to disagree strongly, that we are due for a pullback. We have really kind of gotten stretched a little bit. The government's numbers that they like to throw around definitely prove their point. However, like I've mentioned many times, anybody who lives in the real world knows that those numbers do not apply across the board to our daily lives. I mentioned we went out for ice cream, spent $40. Our grocery bill is still ridiculous. The big news here in Salt Lake City area is our gas prices have dropped about 20 cents in the last week. So that's good. That's $10 on my tank or so. And so I like that. I do like that. Now, I'm a little more bearish this week than last week. Not necessarily because I think something catastrophic is going to happen, although I do believe the market's overpriced, but the market's all usually overpriced. The reason I'm a little bit more bearish is pure valuation. We've gotten a little stretched. Historically, July is a positive month. But we are up so much in July, we could stay flat for the rest of the month and still have a nice month. Historically, again, not always, but August is a pretty flat month. We don't do much. A lot of Wall Streeters take vacation, and then we start to go down. September and October are the two worst months of the year, historically. So keeping that in mind, it wouldn't shock me if we see a little bit of a pullback. Now, the other thing to look for this week is a couple of things. We don't have a ton of economic news coming up. We have the manufacturing numbers and the retail sales numbers, which are important. Don't get me wrong, but that's it. And our Thursday unemployment claims, which come out every week. But we don't have a ton of new news. What we do have is the major kickoff to earnings season and all of the banks announced. Interactive Brokers, Schwab, Goldman Sachs, Bank of America, so on and so forth. Now, remember, we had a stress test a couple of weeks ago, which is just a government's test to see if the banks are strong. They all passed. But almost across the board, banks are down up to 50% from their high for the year because of the mini banking crisis that we didn't really have, but the market thought we had a few months ago. So I would be looking for bank earnings. If bank earnings come in not strong, meaning they do not move the market much this week, that sets a negative tone for the next 3 weeks as we have earnings. Now, the major tech companies do not announce their earnings for a couple of weeks. Netflix announces early, but then you don't get into the Amazon, Google, Apple, Tesla, etc., Microsoft, until later in the week or later in the month. IBM announces. They're always a fun one to see what happens, although IBM, as a general rule, goes down after their announcements, no matter what they do. So I think it's going to get exciting for trading opportunities, meaning, and I've mentioned this many, many times, there's nothing wrong with playing earnings. Some people are like, oh, you can't play earnings, you might lose your money. Absolutely. You might absolutely lose every penny that you put up on an earnings play. You also might triple your money overnight. As long as you realize your risk, as long as you realize your reward potential, I have no problem with it. I do tell people, when you make an earnings play, when you do an earnings play, it really is just saving you the gas to drive to a city where there's casinos. Now, there's more and more casinos, so maybe you don't have to drive at all. But here in Utah, it's about an hour plus to the closest legal casino. So I always say, listen, there's nothing wrong with an earnings play as long as you know your risk, as long as you know your reward. It saves you the time and gas for driving out to Wendover, Nevada. So on that note, I'll summarize. We did have a good week. However, on Friday, there was a crack in the ice. It did not continue its momentum on Friday, but we were still positive for the week. About 100 points on the S&P. That's an average of 20 points a day. That's pretty typical. Even in the higher price market, in fact, in the higher price market, that's a little lower than typical. So keep that in mind. NASDAQ was similar, and the Dow was similar as well. We don't have a ton of major economic news, but we do have the manufacturing number and the retail sales number. And then we kick off our earnings season with the banking stocks and hundreds of others, don't get me wrong, but those are the big ones that'll steal the headlines. If we don't see the market move positive from the banking earnings announcements this week, look for weakness over the next 3 weeks. All right, guys, be careful trading. I hope to see you guys on Thursday as I do my shadow trades, and I teach a class tomorrow night. So hopefully I'll see some more of you later in the week. There's almost always a way to make money in the market, and learn how not to lose money, and you'll see, hopefully you'll learn how to make money. But all right, guys, have a great day. Bye-bye.